Aloha, everyone. Joshua Hayes at BigWaveTrading.com. Happy Super Bowl Sunday. We're going to make this one quick because I'm really busy again this weekend. The market, healthy. I want to remind everybody we have an inverse head and shoulder pattern. This is the head, shoulder left, shoulder right. This is the neckline. We're breaking out above the neckline and holding. Now, short term, our TTM trend momentum is slowly rolling over. So we should expect a pullback. Let's also not forget February is an historically weak month. Options expiration is coming up, historically a weak week. CPI, PPI, retail sales. There's plenty of reasons that the market should pull back. TTM trend momentum is indicating a shift in that trend. Time segment volume and MACD, which I'll remind everyone, tertiary, secondary, quaternary indicators. Price is all that matters. Price is all that I pay attention to. But this helps guide us to where we should be. So short term, we should expect a market pullback with that TSV and MACD curl lower, still above the zero line. Chaikin and money flow still very strong. Everything about this is strong. We're above all of the longer term moving averages, and just the shorter term moving averages are still properly stacked. We're still above the 21 EMA. If we violate the 21 EMA, next level support, all of our longer term moving averages. This entire area should act as support. I'll also remind everybody, which is different in this chart than telechart, all throughout 2022, you'll notice these blue line spikes. You'll see no pocket pivot point signals whatsoever during the downtrend. Since it's this October low on this version of telechart, 1, 2, 3, 4, 5, 6 pocket pivot point signals. Everything looks good. There is one small curious note out there. The 1-year treasury yield is hitting a new year-to-date high and a new 1-year high. So that's kind of curious that the 1-year yield is at the highest level yet heading into the CPI. So we'll keep that on watch. But overall, I am looking for a pullback to hold. But on an hourly time frame, I always look at the hourly time frame when the daily is in an uptrend. I always go one time frame down. For me, it goes 1 minute, 3 minute, 5 minute, 15, 30, hourly, daily, weekly for me. Weekly is good. I want to remind everybody also, one quick history lesson. Secular bear market, you're below the 200, you fail, you stay under. Secular bear market, you're below the 200, you fail, you stay under. Cyclical bear market, below the 200, recapture. Cyclical bear market, can't even get below it. Hard to think that this is going to turn into 2008 currently. Just keep that in mind. But getting back to my whole point, daily time frames in an uptrend, the hourly time frame, now the indicator I'm going to reference is not available in telechart the way that we want it, but we call it the tickets indicator because my programmer Tickets has made it. But on the hourly chart of the S&P 500, the SPY, price should not be below the 50 SMA if this indicator is above zero. When this happened here in January, price below the 50, the tickets indicator on the hourly was above zero. We reclaim, we go. We dip below the 50 again, the tickets indicator was above zero. We reclaim, we go. Intraday, this itty-bitty dip, the tickets indicator was above zero. We get below the 50, we go. This time around, we got below the 50, all was well, but on Friday, the tickets indicator actually fell below zero. So we do not have a bullish divergence in the trend, in the indicator that I like to use. So right now, stocks are really choppy. I think the last stock idea I gave out publicly was AL and Y, and that one straight up failed. And hopefully we all use the cut loss plan to a T that I suggested in the last video lesson. But that's the whole point. So we have had a very strong market rally. But what works, what doesn't work, what explodes higher, what barely moves higher, what doesn't move at all, It's been a complete mix. It's been very difficult to get your hands on the real leaders and hold those leaders. And I tell you what, ACLS, I'm sorry, I missed this one, and I really wanted this one, but you know, you try to buy this breakout here, it works, pulls back. Try to break out, do this breakout here, breakout, fake out. This one just V ramps, no volume. And then all of a sudden, this one is going to be good. It's good volume, but still, it's a weird market. What works, what doesn't work, what never pulls, what does pull. It's hit and miss. And I'm not the only one that notices this. There's a CanSlim certified newsletter for institutions. And I don't know the stocks that they purchase, but I get their results because they post them on Twitter. It's a mixed bag of messiness. And then also the individual that I consider the master, Mark Minervini, he has a Twitter account. To me, this is the greatest CanSlim position trader right now in our lifetime. It's not the greatest ever, but right now, he's the man. You know, he's the master. He's a United States investment champion. He's the master. He says the same thing. Some work, some don't. What will work, what don't, he doesn't really know. All he knows is that this is a hard penny market, not an easy dollar market. And everything that I do confirms that. So just make mention, when it's difficult like this, but the market's uptrending, I really like to focus on the SPY, and I really like those bullish divergence moves when the SPY is below the 50 on the hourly, but the tickets indicator is above 0. Right now, we do not have that. So that setup to trade the SPY back above the 50 is not there. So market looks good. Still a hard penny, not an easy dollar. Now, that being said, I do have a trade idea for everyone on Monday, but this is not a high quality idea. This is just to see if the sector momentum continues. If it doesn't, I'm sure this stock is going to need to completely reconsolidate, set up a more proper base pattern, and we'll look at that. But before we do, on the big caps, do we have any that's setting up in a squeeze that you could set a buy stop on for a move higher? Technically, the UDOW, the DIA is technically, if we were doing a proper setup with this squeeze pattern, you would put either a buy stop above this high or a buy stop above this high with this squeeze, risking to this low, since we're above all the moving averages. That being said, it's not properly stacked. The only other mega cap is MA, and I also think this is too early, but we do have that flattish TTM trend momentum with that squeeze. But as you can see, the momentum has gone negative and triple red, so I would not consider this a good one. That being said, nothing says that MA can't reverse, break out above these highs, so you want to put a buy stop there. And if we're looking at ETFs, we have XBI. Interesting. Could always do a buy stop above here. It is above all the key moving averages. IBB confirming. PPH confirming. Jets is a little bit too early for me. We'll keep an eye on that. OIH looks the best. This one could have a buy stop above here. Cut loss level right here if it doesn't go. Let's see. OIH. XLV, no good. XLB, yeah, looks good. Same thing, though. Buy stop above this high if you want. And that's it for the squeezes. Okay, so let's look at my one long idea for Monday. Okay, AI. First off, is the 50 above the 200? No. Is this price bar coming right on top of the 200 or the 50? No. Okay, then is this price bar happening, forming right on top of the rising 20? No. When you're sending from the 50 or the 200 or the 20, it's a high risk trade. That being said, if AI goes red to green tomorrow, who's to say that this thing just doesn't V ramp, break out above 30 and runs to 50? No one. That also being said, it's not right on top of the key moving average. It's not right on top of a key former resistance level, now acting as support level. But here's the game plan. I'm going to get long at 2360, and I'm willing to risk all the way to this low before I know I'm 100% wrong on the trade. But you could risk to here, or you could risk to here, or you can risk to here, or you can risk to here and here. But if you're new, I'd really only risk to here. But my idea is to get long above 2360, cut your loss if it closes below this low. All right, everyone. Enjoy the Super Bowl. Aloha.